If you see, Indian capital markets have a history of more than a century. However, they remained largely inactive till the 1970s. Post the economic liberalization in the early 1990s, India's capital markets have witnessed transformative growth, enhancing access to funding for businesses across sectors and sizes. India's market capitalization today has surpassed, as Chauhan has mentioned, about 450 lakh crores, with over 7,500 listed companies, making it one of the most diverse markets globally. Today, segments of India's capital markets are comparable with counterparts in many of the advanced economies in terms of efficiency, that is basically price discovery, tradability, which is low impact cost, resilience, which is co-movement of rates across product classes and yield curves, and stability. Well-functioning capital markets are critical to accelerate the sustainable economic growth needed to broaden prosperity and reduce poverty. Deeper and more efficient equity and debt markets can be more effective in helping to mobilize and deploy domestic savings, thereby complementing traditional bank lending by fostering long-term investments. Further, vibrant capital markets can protect the Indian economy from volatile fluctuations in capital flows and reduce the dependency on foreign debt. Capital markets also promote transparency and governance and provide diversified sources of investment to savers and corporates. India today has all the diverse drivers in place to foster deep and well-functioning capital markets. These drivers include macroeconomic stability, market autonomy, fair and efficient legal and judicial systems, efficient regulatory regime that creates conditions favorable for financial contracts and investor protection, easy access to high quality material information, diversity in investor base, efficient market ecosystem for trading, so on. So Indian capital markets have deepened significantly with domestic institutions like AMCs and insurance companies commanding significant AUMs, thereby serving as a significant counterweight to foreign capital flows. Today, there is significantly greater access to far deeper pools of capital than what it was a decade ago. The Indian asset management industry today has an AUM of 63.5 trillion rupees compared to 1.13 trillion in FY 2000, a massive 60x increase. Mutual funds have emerged as key players in Indian capital markets, with monthly SIP contributions exceeding 25,000 crores. I think the December number says 26,000 crores, showcasing rising domestic interest. Foreign portfolio investors in FY24 contributed net inflows of over 2 lakh crore Indian capital markets, with a focus on sectors like financial services, capital goods, green energy, and healthcare. Some outflows are definitely balanced by the domestic inflows. Demat accounts have surpassed 17 crores, with majority of new accounts originating from Tier 2 and Tier 3 cities, marking a shift towards more inclusive investing, with retail investors contributing directly as capital providers to build India. The calendar year 2024, that is till November, saw 76 IPOs raising 1,34,000 crores across sectors such as automobiles, renewable energy, financial services. QIPs contributed 1,23,000 crores, supporting expansion, mergers, and deleveraging efforts. The record volume of equity issuances and the ability of the capital markets to absorb this significant supply of paper provides confidence that Indian capital markets today supplement banks and institutional lenders to fund capital needs of India. The richness and maturity of Indian capital markets is further reflected in the fact that Indian capital markets have come up as an alternative where the global corporations are looking at to list their Indian subsidiaries, making India possibly the only non-home jurisdiction where such MNCs list their subsidiaries. The derivative segment, of course, of the Indian capital market has also become one of the largest in the world. NSE remained the world's largest derivatives exchange for the fifth consecutive year in 2023. It ranked third in the world in the equity segment by number of trades in 2023 as per the World Federation of Exchanges.